Good afternoon. It's Friday, October 20th, 2006. This is Brian Shannon speaking from Alpha Trends. And the market's just closed for the week, so let's go ahead and take a look at what we had happen this week. The semiconductor holders on the screen right now, SMH, did not show any ability at all to bounce today. And that really continues to concern me, the action in these semiconductors. I think it's the biggest reason for concern about the market right now. The market always gives us something to worry about. And right now, it's the semiconductors, without a doubt. If we take a look, last week I was very encouraged because they broke past that 200-day moving average and seemed to be holding above there as well. They closed above there on a weekly basis. Seemed like they were headed for higher highs, and probably to hopefully take out this level of resistance. However, the lows in here from late 2005 and earlier in this year, near 36, look like they might have some pretty good resistance there. So right now we got to bounce off that level. We're back below the 200-day moving average, and we closed just below the 50-day moving average as well. Now, I think that what's happening here is that people kind of threw their stocks away. AMD seems to be the biggest culprit in that group. I'm not really a big follower of all the individual semiconductor stocks because I don't really trade them, but I think that they have a lot of impact on the overall market, which is why I like the semi index. Here on the 50-day moving average, though, it is still rising. So I want to give the market the benefit of the doubt here. But obviously, with this relentless selling, it gives us reason to continue to be concerned. The measured move didn't, hold as far as a level of support, although it's still pretty close to that level. In this 10-minute picture that we're looking at, the 10-minute time frame, we still see these lower highs and lower lows. So anyone doing any bottom fishing in here, there's really been no reason to so far. Now, I think if you are a bottom fisher, it's a speculative play, but early next week, maybe taking out this high right here provides a little bit of upside. We've still got this longer term moving average and the 5-day moving average heading lower, though. But as sold off as they've become in the last couple of days, maybe it's worth a little shot with a stop on your here. I don't think I'll do it because I'm a trend trader and I don't like to fight this type of momentum. But if you are looking for that type of play, perhaps perhaps that could set up. Again, that weekly time frame. Oh, what a big, ugly red engulfing candle right here. This is what's known as a bearish engulfing candle. It took out last week's high and what last week's low and closed at the bottom, near the bottom of the range. Typically viewed as a very bearish event, a reversal candle, and we'll see. Let's let the market decide. This weekly time frame still gives us mixed pictures with a rising 50-day moving average, a declining 200-day moving average. Maybe we're just going to consolidate some more. I don't know, but this is really ugly. A failed breakout right here that gets a lot of people optimistic, and then it fails to hold. From failed moves come fast moves. That's really going to keep us on our toes next week, in particular if it breaks down below the 33, 33.25 level. Then I think there could be bigger trouble. What I think would really be worse, actually, would be a low volume rally up towards about this 10-day moving average, and then a failure towards the end of next week, early the week after. But this is just one group. It isn't the market. So let's go ahead and take a look at the market because the S&P 500, obviously, we've got a much different story here. This market continues to hold up. There's just no signs of a slowdown yet. Now, on the 10-minute time frame in the SPY, rather, we can continue to see this consolidation in here, but the market got strong a little bit towards the end of the day and actually finished with a very small gain. The spiders were up a nickel. So mixed message in there again. A lot of the individual stocks, though, obviously, we had a great play in the Apple calls. The stock closed up near $80 a share. Those calls, I don't think you could have really paid more than about 2.5 for them since I recommended them last Monday. So nearly a double for most people involved in that. Google had a great quarter, obviously, and that stock looks like it's heading up towards that target near $500 a share that we'd been talking about a week ago after it broke this symmetrical triangle. So Google looks like it's on its way higher. Check Wall Strip on Monday because we're going to be talking about that one, and you'll get some real good insight from a lot of different commentators about that stock and what the trends are, that sort of thing. But big gap higher, stock acts great. No reason to think it's going to fail here. Let's take a look at the Qs right now. The QQQQ Nasdaq 100. Great, great uptrend. Nice little pullback. Looks like it might be poised to go higher again, but can it do it without the semiconductors? That's the question. We've got resistance here at this declining 5-day moving average. Real mixed bag with all these moving averages. I think above 42.20, I would say I would probably get a little bit more optimistic, and below 41.60, I would think there's more problems. This remains, though, a stock picker's market. This past week, we had some fantastic plays. I mentioned numerous times SIGA to buy at above $1.90 last Friday, Monday, and Tuesday. And finally on Wednesday, big open, big, great move in there. We also had CHRW on a short side play that it completely reversed, but our target was $40 a share. We got short over here at this day, 41.65. Just some fantastic plays out there. So we continue to focus on the stocks. Let's take a look at the mid caps, MDY. The mid caps, these guys continue to hold up too. So we're seeing pockets of strength. And actually, we're seeing more pockets of weakness. Overall, we've got broad strength, but that semiconductor index a lot of times leads the market. So that's really what has me defensive in here. But we're above this this rising 200-day moving average still, and we saw a nice continuation of the rally that began 2 weeks ago as it pushed above that 200-day moving average. And now we've just got a consolidation here on diminishing volume above the rising 10-day moving average. So this picture looks bullish. But again, can the market survive without this participation and leadership from the semiconductors?